We're going to start the meeting with going over the training objectives, and then we'll transition over into the invoice submission requirements. What are the supporting documents that are required when submitting an invoice? We'll allocate some time for Q&A, and then we'll transition over to discussing indirect versus direct costs, how to calculate indirect costs, have another Q&A session, and then the compliance team is going to share some updates with you before we end our meeting. I do want to share that the PowerPoint presentation and the recording of this training will be shared with everyone after this training. And of course, at any time, if you have any questions, you can add your questions on the chat, or you can unmute yourself or raise your hand, and we'll be happy to answer any questions you have throughout the presentation. At the end of this training, you will know what are the invoice submission requirements, what are the supporting documentation required with invoice submission, the difference between indirect and direct costs, and how to calculate indirect costs. Renee, I see that your hand is up.
I just wanted to just add to the little housekeeping that folks, as you enter, if you were not here when she first announced, that please go ahead and introduce yourself in chat, and then Myra and I will introduce ourselves as well.
We'll start with invoicing. Why are invoice submissions required? Invoice submissions are required to request reimbursement for allowable expenditures. They are also required to allow the funded agencies, KCRHA, and funders track budget spend down, and so that we can meet funder and contract reporting requirements that are outlined in your PSA. KCRHA compensates agencies for the satisfactory performance of contracted services. The total compensated amount from KCRHA will not exceed the total budget amount listed on the PSA. Contract fund awards may only be used for allowable costs incurred during the contract term. So any expenses that are made before or after the contract term are not reimbursable. The budget reallocations between two or more major budget categories that are less than 10% of the lesser budget category do not require a written amendment signed by both parties. To submit a budget reallocation, you'll need to submit a request in Salesforce, and I'm going to walk us through that process. So once you log into Salesforce, you'll be taken to your home page. At the top, there is a menu. You'll need to select My Contracts. Look for the contract that you want to submit an amendment for. If you do not see the contract, it may be because of the settings. Here I have it as recently viewed. I would need to click on the arrow, select all contracts, and then that gives me the list of all the contracts that I have access to. You select the contract that you want to submit a budget reallocation for. You have your details, the agency name, and all your contract information. You have your budget towards the bottom of the page. Your budget includes what are your fund sources for this contract and what is your total funded amount, paid amount, and remaining amount. To submit a budget reallocation, you'll need to click on the Request Amendment button at the top right corner of your screen. Once you click on it, let me select another contract. This one has an existing amendment. So as you can see, if you already have an existing amendment, Salesforce will not let you submit another amendment until the amendment that you're currently working on is resolved, executed. Click on this contract, select request amendment. This one has a funding disbursement. It's also very important to note that you cannot submit amendments while you have any open funding disbursements. So I'm going to look for another contract. Okay. I am going to select this one and cross my fingers that there's not an open amendment. Got it. So once you click on request amendment, this amendment window is going to pop up. You'll need to select the category change amendment type and provide a summary for the reason of your amendment. So you would enter reallocating salaries. Reallocating 300 from salaries to benefits. So once you include the description for all of the reallocations that you want to do within that major budget category, you click on next. This window will populate with your budget. This is where you have an opportunity to reallocate. So for this one, we're saying we said salaries. We don't have salaries here. So let's say for this situation, we're removing 100 from here and we're adding it to here, all within the personnel benefits. You click on submit amendment and you'll receive the notification that your amendment has been submitted and someone from KCRHA will reach out to you if there are any further questions. For any budget reallocations between two or more major budget categories that exceed 10% or more, then the lesser budget category require a written amendment. Budget reallocations to a major budget category not included in your original approved budget also require a written amendment that needs to be signed by both parties. All agencies are required to submit monthly invoices on the 10th business day of the month for the previous calendar month, or quarterly invoices on the 10th business day of the month for the previous quarter, unless otherwise specified in the contract. Invoice submissions must include a posted general ledger generated from the agency's accounting system detailing the cost to be reimbursed. For COC-funded contracts, the GL should also include the costs that are attributed to all COC match expenditures. The GL documentation must clearly identify the cost being charged to KCRHA for reimbursement up to the total invoiced amount. And there are different ways to clearly identify the cost on your GL. Some examples include highlighting the items that you are requesting reimbursement for, or you can submit a separate document detailing what are the costs and the amounts that add up to your invoice total. If the GL does not include sufficient detail to identify the FTEs or staff costs to be reimbursed, a payroll log evidencing specific personnel needs to be submitted. The identified balance tenant list or client disbursement logs for rental assistance or direct client assistant cost using the form located on the KCRHA website as applicable. Monthly HMIS program outcome reports if applicable, and quarterly narrative reports if applicable. Quarterly narrative reports are due at the close of each quarter according to the effective date of the performance period. For example, if your contract has a January 1st effective date, the quarterly narrative reports are due in April, July, October, and January. If your contract has a June 1st effective date, then the quarterly narrative reports are due on September, December, February, and May. And we always advise for you to see your PSA for specific submission schedules and required reports. Mary, I see that your hand is up.
Yeah, I have a question about COC match eligible expenses. I know on the COC invoice template, there's a tab to include match eligible expenses, but that's never been something that Wellspring has been asked to fill out. And I know that we submit that though as a separate GL because we're getting reimbursed for those costs on a separate contract. Is that still something that we can continue doing, or should we be filling out that invoice template with the information as well?
If your contracts are separate, then continue submitting as you are.
Okay.
And just for clarification, Mary, when you say your contracts are separate, do you mean your KCRHA contract, meaning your COC funded contract versus your match contract is separate, or was separate in the past?
I might be getting confused by what separate means for you. We have a COC and CHG contract through you, and I believe they're now under the same contract because I used the same before under the old system that was in place like a year-ish ago. I think they were separate, but now they've been merged. So the COC match expenditures are being submitted alongside the COC invoice because everything is being submitted all at once, and our CHG contract is where those COC match expenditures come from. But I've I haven't been asked to fill out the um uh the invoice tab for COC that details match expenditures. I hope I'm making sense. I can pull up an
I
example if
think you are.
helpful.
I do. I think I understand what you're saying. So, COC contracts and COC match contracts for KCRHA funded or fund awards are now combined. Historically, they were not, right? And so it sounds like your question is, should I continue to submit that separate GL for my COC match expenditures, which are being charged to CHG, versus do I need to fill it out in the chart form on the form on Salesforce? Is that the distinction that you're making?
Um, no, so there's I'm talking specifically about the invoice spreadsheet that we're required to fill out. Because I'm already filling out everything on the website, right? I'm putting things into the correct columns and everything. This was a
Mm-hmm.
question that came up during our single audit last summer, which is partly why I'm bringing it up if we ever have this again, or if anyone else goes through this process. I just want confirmation that we are satisfying the submission requirement to include COC match expenditures based on your understanding of what those requirements are. So that way, if I get asked about it again, I could be like, yeah, KCRHA said the way we're doing it is fine, or there's a different way we need to be doing it.
Very good.
Mm.
Let us circle back with you specifically so that we can take a look at what documentation you're providing. Obviously, off the top of our head in this session, we don't actually know, but we want to take a look at that. So we will circle back to you on that. And I have included this in the notes. So we'll send a follow-up email. Okay?
Thank you.
You're welcome.
Any other questions? The costs for the following budget line items need to be itemized in the invoice. The budget line items are salaries, other employee benefits, operating supplies, repairs and maintenance supplies, other professional services, repairs and maintenance, other miscellaneous expenses, and administrative/indirect costs. This screenshot here shows an example. As you can see, in total for personnel services, this agency is invoicing for $3,080.12. And then they itemize the breakdown by letting us know that for the case manager/mental health specialist, they are requesting reimbursement of $2,095.15. And for the case manager, mental health specialist, they are requesting $984.97 of reimbursement. So this is something that the compliance team is going to look at while reviewing your invoices. Effective in Salesforce on March 9, 2026, federally funded contracts are required to certified invoices. This provision is on the PSA. Per 2 CFR 200.415, all financial reports, payment requests, and cost certifications submitted by the contractor related to federal fund awards must include the following certification by an authorized official. This certification is included before the agency submits the invoice. So once you're allocating your expenses and you click on the submit button, for the contracts that are federally funded, they'll receive a pop-up that says, please certify your invoice. The agency selects certify and then they submit, and then it gets submitted into KCRHA for review and approval. This new requirement does not impact the KCRHA payment schedule. Agencies are required to maintain all administrative documentation, including but not limited to invoices, receipts, general ledger, and bank statements for a minimum of 6 years. There are exceptions to that rule if a documentation is subject to an unsolved audit or investigation. The documentation must be maintained until final resolution has been done, which may exceed the 6 years. If requested by KCRHA, agencies are required to provide additional supporting documentation to support reimbursements. This slide here shows the updated 2026 spending priority chart. The updated chart below lists the current funder spending priorities. We ask that you please reference this chart when completing your invoices. The spending priorities are subject to change at the election of our funders. As you may see recently, our funders at King County notified us that we need to prioritize spending CDBG-KC-26 and CDBG-CV-KCWA-26 by June 30, 2026. And those funds need to be spent 100%. Any changes that we receive from our funders will be communicated to all of you as soon as possible to ensure that we meet the spending deadline. Another update that was communicated to us was the ESG-King County-26. 85% of those fund awards need to be spent by July 31st, 2026. Agencies are strongly encouraged to allocate their disbursement requests to the fund source corresponding to the expenses charged in their GL. When allocating your allocations, when your agency allocations require adjustments due to changes in spending priorities, the compliance team will make those adjustments after consulting with you and receiving approval from your agency. So if you submit an invoice and the compliance team notices that you're allocating expenses to a non-priority fund source and those expenses are allowable under the priority fund source, they are going to reach out to you via email, phone call, and ask if they can make that adjustment for you. Fund source year allocations. Apply the following rules to ensure you allocate costs to the correct fund source. 2025 expenditures can only be allocated to the 2025 fund sources, and the 2026 expenditures can only be allocated to the 2026 fund sources. For example, State King County-26 is a 2026 fund source. This is the naming convention that we use here at KCRHA. So if you're ever wondering what year your fund source belongs to, you'll be able to confirm by looking at the last two numbers of the fund source name. To support agencies with allocating their invoices, KCRHA developed the allowable cost checklist. The allowable cost checklists are available in the Salesforce resource library. They are updated on an ongoing basis based on updates that we receive from our funders. We'll be communicating any updates with any of you on an ongoing basis, and we'll also update the Salesforce resource library to ensure that you're always looking at the most updated allowable cost checklist. Are there any questions on the invoicing section? See none, I'm going to pass it over to Renee.
Good afternoon, everyone. My name is Renee Akins, and I am the Director of Contracts Compliance and Risk Management here at KCRHA. And we're going to move into the indirect cost portion of the training. And I am going to pause before we do that because I've noted that someone has posted a question in the chat. For an amendment, do we put plus or minus while we make a request on Salesforce? And and I'm probably pronouncing your name wrong, Awaz. If you could come off of mute and elaborate on your question, that would be helpful.
Sure. Hi. Hello, everyone. Good afternoon. Yes, my question was for the amendment process that recently we saw on Salesforce. So when we are making a request for amendment and we are reallocating some fund from one uh, category to the another, so do we need to put plus or minus there? Just we saw the example, but didn't catch if we're moving $100 from salary, from benefit, let's say from the industrial insurance to the FICA expenses. So do we put 100 in one column box and then minus 100 on another one? I was not able to catch that one before. Sorry.
Myra, do you want to go ahead and address that?
Yes, yes, that would be helpful. The agencies have the discretion to include the project summary details, and that will be very helpful if you include plus and minuses. That way, when the compliance team is reviewing your amendment, they can confirm you're removing this dollar amounts from this category and moving them to this other category. Did I answer your question?
Yes, you did. Thank you.
Okay. So as we move into indirect costs, we want to first start out with some few definitional so that we're all operating from the same understanding of what these are. And so our direct costs plus indirect costs equal our true costs, which are the total costs under a particular contract. So that's the true cost of services. Next slide, please. Okay, so direct costs are defined as those costs that are directly attributable to the performance or the provision of services for a specific project or organizational activity. This definition is captured in 2 CFR 200.413. And so when we think in terms of program services, those costs that are directly contributable to the conduct of those services that support that program, those are deemed direct costs. And so if we can move to the next slide, please. So some typical examples of direct costs that you will have and will see are salaries, wages, and benefits of employees that actually provide services directly to clients under the grant, right? So if we have a emergency shelter service, our emergency shelter service staff that are on site providing supportive services or otherwise, they're directly attributable to that, the conduct of those program services. That's considered a direct cost. They may also include materials and supplies that are directly used to support the program service, the provision of program services. They may include travel expenses that are used to provide services to clients and for required trainings by direct service staff. It could also include equipment costs used in the provision of program services, as well as rent and occupancy costs. So your square footage used by direct staff or used in providing the actual services for those program that are subject to that grant. Those are all examples of items that would be deemed direct costs. Next slide, please. Okay. So direct costs, as you could see from some of those examples, right, particularly when we talk about rent, space, etc., they may include administrative costs, so long as those administrative costs or activities are directly attributable to the project, to program services, and they must be applied consistently in accordance with your written cost allocation plan, right? So that means if I have administrative costs that I charge as a direct cost for this program with KCRHA, I must charge those costs in the same manner across all of my programs, whether funded by KCRHA or not, right? So my written cost allocation plan is an indicator of how I do business, how I attribute or assign costs, allocate costs, and I must do that consistently across the board. So that means you can't pick and choose, oh, I'm going to charge it directly for this program and I'll charge it indirectly for another program. That is not permissible, right? It must be consistent across the board. Next slide, please. Okay. Administrative costs, as you will note, and as I alluded to earlier, they can be claimed as a direct cost when they are directly tied to the cost objective. Examples of those are property insurance, rent utilities, office supplies, administrative support, general and facility costs. So you note we included that as well. These are all things that are typically categorized as administrative costs, which can be charged directly, but they are apportioned based on our cost allocation plan, right? And so let's move to the next slide because you're going to see some similarities here. Indirect costs. So indirect costs are those costs that are not readily identified with a specific project or organizational activity, but they are incurred for the joint benefit of both projects and other activities. So those are costs that we generally ascribe to, and I'm using air quotes, overhead costs, right? I am an agency who is in the conduct of providing homelessness services, right? And I have different project or different types of homelessness services I provide, some of which may be funded by KCRHA, some of which may be funded in other ways, right? And I have overhead or business costs that are associated with those. I can charge those indirectly, and it is based on a percentage of my direct costs. And again, the same consistency rule applies. And if we move to the next slide, you're going to see some similarities, and we're going to talk a little bit about why you see those similarities. So, typical examples of indirect costs for many nonprofit organizations can include things like depreciation on buildings and equipment, the cost of operating and maintaining my facilities, general administration and general expenses, such as the salaries and expenses of executive officers, personnel administration and accounting, office supplies, office space, utilities, postage, administrative support, such as clerical staff. It could be property insurance. And then we're saying again that rent and occupancy, right? So again, administrative costs, that's the cost category, right? And I may charge them either directly or indirectly, but whichever option I choose, it must be in accordance with my cost allocation plan, which must be applied consistently across all program types, regardless of funder. Okay, and so again, the cost type is administrative, but how I charge them is either indirectly or directly, depending on what my cost allocation plan is. Okay, let's move to the next slide. Major nonprofits are defined as nonprofit organizations that receive more than 10 million in direct federal funding, right? So for major nonprofit organizations that have federally funded projects, they classify and they must, according to federal regulations as it relates to federal funding, indirect costs must be classified into two categories. And those category breakdowns are facilities and administration, right? And the costs that we saw that were identified as administration costs, some of which may include facilities for major nonprofits, is broken out in two categories, right? So facilities equals depreciation on buildings, equipment, capital improvements, interest on debt associated with certain buildings, equipment and capital improvements, and operations and maintenance expenses as it relates to those facilities costs, right? Administration, i.e., and I'm using air quotes here, general administration costs include general expenses such as director's office, accounting, personnel, and all other types of expenditures not specifically listed under one of the subcategories of facilities, right? And so it could include cost allocation from other pools where applicable. And the rule for further reading, and we want you to make sure that you're doing that additional reading, the rule is clearly spelled out in detail under 2 CFR 200.414A. And I see a question has been posted. Will these slides and the recording be sent out to all attendants? And yes, it will be. There are other steps. Yes, absolutely. So you're going to receive a recording as well as this presentation slide. And I also want to note that all CFR references in this presentation slide are hyperlinked to the code. So we've actually done a bit of the work for you. You don't even have to get on the internet and search it for yourself. You can click the hyperlink and it'll take you directly to the updated code. You're welcome. Okay, so can we move to the next slide, please? Okay, so our key takeaways based on what we've gone over is there is no one size fits all for any of these terms, right? What I choose to charge directly versus indirectly, we know what direct costs are, right? And direct costs can include administrative costs. But if I'm charging my administrative costs directly, I must do so consistently across all of my programs, regardless of funders. Or if I elect to charge those administrative costs indirectly, again, that same consistency applies. If I am a major nonprofit, then I know my categorization is broken up into two major categories: facilities and administrative costs, i.e. general administrative costs, and those are those costs not otherwise included under facilities, right? And there are many organizational types and structures, ranging from large to small, that we contract with, right? Some are local and some are state government. And so their cost accounting methods may vary, and they will vary based on your organizational structure. So you can't necessarily compare what one agency is doing to what another is doing, because again, it depends on that particular agency, its size, and what their cost allocation plan includes, right? And so while program costs must be consistently categorized within an organization, a cost classified as a direct program cost by one organization may be considered indirect by another organization. And what we're looking for in our review is consistency, right? And that's why we ask, when we do our monitoring of your programs, our finance department, for that fiscal component, we're asking for copies of cost allocation plans because we need to ensure that it is being consistently applied. Next slide, please. Okay. Another key takeaway is that in all cases, regardless of whether it's charged as a direct cost or an indirect cost, all of those costs must be allowable based on the fund source, and per uniform guidance, these additional rules must also apply. They must be reasonable and necessary costs. They must conform to the limitations or exclusions of that particular fund source. They must be consistent with policies and procedures for federally and non-federally financed activities. So I want to note that even though we're seeing federal regulations here, this is true for all fund sources, right? So there are non-federally financed activities or non-federal fund sources. Those cost principles still apply. Reasonable and necessary, conform to any limitations or exclusions, must be consistent with policies and procedures for the applicable fund source. They must be applied consistently across all programs, regardless of fund source, and they must be determined according to generally accepted accounting principles, right? So when we talked about in the previous slide, depreciation, right? Depreciation must be governed by generally accepted accounting principles. And our direct or indirect costs are not included as match or cost shares for any federally funded program unless you have written documentation of federal approval, right? So COC funds can never be matched for any other fund source. However, ESG, which also requires match, can be matched for COC, right? And that is documented, federally approved in the CFRs. And so again, we have linked the codes that are referenced so that you can do further reading there. And right now, the only fund sources that KCRHA administers that require match are COC funds, which must have 25% match, and ESG funds, which is 100% match. And in all cases, all costs must be adequately documented. And so while we only require submission of general ledgers as a part of your monthly desk reviews, that is not the limit of your documentation requirement, right? So anything that you have documented in your general ledger that we review as a part of your monthly invoice review, you must also have the backup documentation for that, right? So any of your receipts, your invoices, all of that, you must maintain that upon your records within that defined limit, up to 6 years, which it could be longer based on those exclusions, right? And then we do review that as a part of our comprehensive monitoring. It must be available upon request, not only by us, but by our funders as well. Okay. And next slide, please. Okay. So there are 3 acceptable methods to request reimbursement of indirect costs. And those 3 methods are cost allocation plan, which is an annual dollar amount per department or program. So again, you're allocating across programs a percentage of those costs, particularly if you're charging them direct. Then you have your NICRA. If you have a negotiated indirect cost rate agreement, the rate is applied directly to your project, and most NICRAs contain certain exclusions. And then you have the de minimis rate, which is a percentage of the modified total direct costs. Right now, the de minimis percentage is 15%, but again, it is applied to a modified total direct cost because it requires certain exclusions. And I see a question was posted. Is the de minimis rate 15% for all grants? Do you have any limitations? So unless otherwise stated for local funds that it is a default rate, a de minimis rate, you can make that election. It is not, I guess, let me make sure I'm understanding what you're asking me. It is not the rate for all fund sources, if that is what your question is. But for federally funded contracts, if you do not have a negotiated rate, the default rate for federally funded contracts is de minimis. Does that answer your question, Laura, or am I missing what you're asking me? And please feel free to come off of mute. Or drop it in the chat.
Sorry, I was typing and then I couldn't find my mic. So for the other funding sources, like a state funding source, that rate, that reimbursed or the indirect rate would be applied in the would be stated in the contract?
No. So non-federal fund sources have different indirect cost rates, right? And so in terms of what the indirect cost rate for that is going to be based on that funding rule. So for example, CHG is now 15%, but it's not 15% de minimis.
So it's not
It's
15% of
15%.
MKDC? Is it just
It's 15% actual with a cap. And so my recommendation for you is going to be to look at the CHG guidelines, and we have 2. One is state, which is Department of Commerce, and then anything that is King County pass through, there is a separate King County CHG guideline. And the 2026 guidelines have been published. They are available on our website, and for the Department of Commerce, also available on our website, but then you can also go to the Department of Commerce website. And it is they have changed the rule because their default rate used to be 10% de minimis. That is no longer the case. So make sure you're accessing the most recent guidelines.
Thank you.
You're welcome. And then Pat, what type of backup documentation is required for the de minimis rate? I'm not sure what you're asking me. Are you asking me in terms of what so we require you to make an election if you don't have a NICRA. You can elect to apply the de minimis rate. If you elect to apply de minimis, we require you to apply that across all federal fund sources. And then non-federal fund sources, the indirect cost rate is going to be governed by the rule of that fund source. And so in terms of backup documentation doesn't vary, right? You have to have your posted for invoicing requirements, posted general ledger, right? We require that. And then if you're have direct client costs, you may have a balance tenant lists and or client disbursement log. We require that. But as it relates to your detailed documentation, same thing. You have to have invoices. You have to have receipts for payments. If you pay charge card, bank statements, all of your documentation requirements are pretty much the same across the board. You have to document what you expended it on, and you need to provide proof of that. Did I answer your question fully, Pat?
Yeah, hi, Renee. I'm not sure because the 15% is based on the allowable costs, and so if you just put in 15%, are you expected to come up with an backup expense amount that equals that 15%, or are you just looking at a pool of administrative costs? Does that make sense?
So there are a combination of things you're providing. So you have a cost allocation plan that documents how you apportion your indirect costs, right? You're going to have any costs. So I understand. I think I understand what you're asking for, right? You're saying, do I need to have a receipt or a piggy bank list of everything that is allocated indirectly versus directly? Is that what you're asking me?
Yes, I'm asking, do you have to, air quotes, approve the 15%? Do you have to have expenses that reflect that 15% you're charging? Yep.
Yes,
go ahead.
Yes. So 15% modified. Remember, there are exclusions that you cannot exclude in that cost. That's thing one.
Right.
And so you're asking for your primary is obviously going to be your cost allocation plan. Like, what do you charge to direct, and what percentage are you across? What is your percentage breakout, right? So that's thing one. And then thing two, as it relates to those actual expenditures, I'm thinking as I'm answering you, right? Because I'm thinking, so Seattle General is a local fund source, right? Theirs is actual with no cap. CHG is 15% with a cap, but it must be actual. And in order to prove actual, you have to have documentation of the expense, right? And so I'm trying to apply that lens to and now analyze as I'm speaking to you, is that any different as it relates to the de minimis rate? And with that answer, I'm just going to say, let me circle back with you in detail because I can't get past the cost allocation plan in this moment. Is that okay? But
that's fine.
I'm writing your name down because I don't want to misstate, and I want to make sure that I'm giving you all accurate information.
Thanks. I'm with Roots now, in case you didn't.
I saw your name and I was like, Pat, what's going on
here?
But
hey, Renee. I've never worked with de minimis before. I've always had a NICRA. And so that's why I'm asking the questions, because I want to make sure during an audit, of KCRHA audit, that I have the information that will be needed.
Thank you for that question. And I'm going to circle back, and not only will we circle back, but we're going to make sure that when we send out the slide and the video, that we are including an FAQ related to that and the impacted code, so that you have the CFR that's aligned with that for everyone's reference.
Thank you. I tried Google and I just couldn't get to a definite answer. So I was looking forward to talking to you because of that.
Absolutely, absolutely.
Okay, thank you. I'll quit talking. Thanks.
It's okay. You're welcome, and thank you. And thank you for that question, because my
Okay.
mind kind of froze with that. I'm like, I couldn't get past cost allocation plan. So yes, we will get that information to everyone.
Okay.
Okay. Can we move to the next slide? I think we covered everything on here. Okay. Cost allocation plan. A cost allocation plan summarizes in writing the methods and procedures that an organization will use to allocate direct and indirect costs. We talked about that, right? To various programs, grants, contracts, and agreements. And there are 3 acceptable methods to calculate the indirect cost rate within a cost allocation plan, right? There's the simplified allocation method, there's the multiple rate allocation method, and then there's the direct allocation method. And there are analogous CFRs that explain in detail how each of those work. And we actually have some supplemental trainings that we receive from HUD, information that we can, if we haven't already, I'm not sure, made available on our website. Next slide, please. Okay. So we also know, right, the next method is NICRA. So both governmental or NICRA, made me think I'm pronouncing it wrong, but I've been saying NICRA for years, so I'm going to roll with it. So that's your negotiated agreement, right? Your indirect cost agreement. And it's both governmental and nonprofit entities that receive federal awards. They can negotiate an indirect cost rate with their cognizant agency for use across your federal awards, right? So your NICRA applies to your federal awards. And KCRHA is not currently a cognizant agency. We don't do that yet. And so it's generally going to be your federal, it's going to be HUD. It's going to be something you've negotiated with HUD, right? So the cognizant agency is the federal agency that provides the highest dollar value annually in awards to an organization. If the agency has a federally negotiated rate, the agency must apply the federally negotiated rate across all federal awards. So just like you, indirect allocations have to be consistent. Same is true for your NICRA. If you have a NICRA, you must use it for your federal awards. You cannot pick and choose, oh, I'm going to use it for this project that's federally funded, but not this project. It must be applied consistently across all of your awards. Next slide, please. Okay. In some instances, a non-federal KCRHA fund source will also allow for the application of the federal negotiated rate to non-federal fund sources at your election. And right now, based on KCRHA's funded portfolio, that only applies for Seattle General Funds, right? So for Seattle General Funds, their requirement for indirect costs, it allows for actuals with no cap, right? But if you elect, that necessarily includes the application of your federal negotiated rate, if you would like to apply that. Most people elect not to because most federally negotiated rates, they have exclusions, right? And so if I can get my actual with no cap, then that's usually what I'm going to go with. But right now, Seattle General Funds would also accept a federally negotiated rate agreement if you chose to apply that. Okay, next slide. Okay, a little special that I learned only, I want to say 1.5 to 2 years ago. So a NICRA allows an organization to use a portion of their unrecovered indirect costs, like administrative expenses, as a match requirement for grants. And that's governed by 2 CFR 200.306C. Unrecovered indirect costs is the difference between the amount charged to the federal award and the amount that could have been charged to the federal award under your subrecipient or approved indirect cost rate agreement, and is subject to prior approval of the federal agency or pass-through entity, in this case, KCRHA. So to put this in a real life example, I have a federally funded contract with KCRHA for which I'm allowed to charge indirect. For whatever reason, in my cost budget allocation, I choose not to include indirect costs under that. You can, if you had COC or ESG funds, you could use that amount that you could have charged to indirect. You can use that as your match, a portion of your match for your COC or ESG funded contract. And for more information on that, again, check out 2 CFR 200.306C. Next slide, please. Okay. Under the Uniform Administrative Guidance, eligible organizations can claim up to 15% of their modified total direct costs as indirect costs if the following criteria is met, right? You don't currently have or have never received a negotiated indirect cost rate. And again, we're talking about federal fund awards here, right? So if you have a NICRA, you have to apply your NICRA. If you don't have a NICRA, you can use the 15% indirect or de minimis rate, right? If you're not you also must not be a state, local government, or Indian tribe receiving more than 35 million in direct federal funding. And you will use the rate indefinitely and consistently for all federal awards until you negotiate an indirect cost rate, right? So that's why when we have you certify what your election, if you're electing to use that, we require to use it across all fund sources. That is because that is what is required under the CFRs, okay? And also that you will comply with 2 CFR, that symbol's wrong, 200.403 factors related to allowability of the cost, right? And that's referring back to our previous list as it relates to all costs must be allowable costs. They must be reasonable and necessary, etc. That whole little list we provided to you there. Okay. Next slide, please. Modified total direct costs. So we know that under the de minimis, 15% de minimis, it is a modified, you're applying that percentage to a modified total direct cost. That's when we're talking about those exclusions, right? So your modified total direct cost includes all direct salaries and wages, applicable fringe benefits, materials and supplies, services, travel, and subawards. Subawards, though, have a limitation, right? Subawards and some subcontracts up to the first 50,000 of each subaward or subcontract, regardless of the period of performance, right? So any dollars attributable in excess of that 50,000 cannot be counted as a part of your direct costs to which you're applying that 15% for your subaward. So if you're subcontracting out, right? And next slide, please. It also excludes, so 50,000 and above subaward contracts, it also excludes equipment, capital expenditures, charges for patient care, rental costs, tuition remission, scholarships and fellowships, participant support costs, and we had questions about that before, and so I'm going to circle back to that in a moment. And as previously stated, the portion of each subaward or subcontract above 50,000. And then there are other items may only be excluded when necessary to avoid a serious inequity in the distribution of indirect costs and with the approval of the cognizant agency for indirect costs. And participant support costs, in our previous training, someone asked what that was about. Direct client assistant costs are excluded from that amount. So that is a necessary exclusion as well. And that is what that means. Okay. And the next slide. So to support you in your indirect cost calculations, KCRHA has created a handy dandy indirect cost calculator, and it is available on the KCRHA website under service provider, and then you're going to go to grant management resources. And when you scroll down that page, among the resources that we make available to you is that indirect cost calculator. Okay, this calculator, if you download it, Generally speaking, I recommend that folks access it from there. And if you download it to your desktop, that you make sure that you check it periodically for any updates. I will note that during our last training, someone noted that there is something that we need to make a correction that I thought we did and had uploaded it, but I don't think the corrected version got uploaded. So whenever we uploaded a corrected version or a different version, we will make sure that we're sending notifications to our contracted agency so that you're aware that an updated calculator or any other resource for that matter has been made available to you on the website or in Salesforce. Okay. And so as you would know, the first page of your calculator, it contains an instruction sheet. And there are 3 different calculators. So it tells you what the purpose of the calculator is. It gives you a guidance for agencies on referencing allowable indirect cost rates. And we also provide guidance on which calculator should I use, right? So we have one for the de minimis rate. We have one for your NICRA, if you have a NICRA. And then we have one for Department of Commerce, CHG. And if we click on, and they pretty much work the same. So let's just click on the calculator for de minimis rate. And the variance you're going to see, the calculation works the same. It's just you will have varying percentages. Like if you have a NICRA, it's going to be whatever your negotiated rate is. And then what must be excluded depends on, are we talking de minimis or what's excluded under my negotiated indirect cost rate agreement versus what must be excluded based on the Department of Commerce guidelines for CHG. And in this case, it's a cap, quite frankly. But you will note that you would enter on the left-hand side, we have a list of what are the excluded costs for the modified direct costs, right? We give you a little guidance on the federal guidelines and requirements as it relates to the de minimis rate. And then just a little introductory section. But you'll enter the total federal award amount. You're going to enter the applicable de minimis rate. In this case, we now know it's 15%. We don't pre-populate it because we know that recently changed, right? It used to be 10%. And so you're going to be manually entering that. And then you're going to, based on your budget, right, you're going to enter the excluded costs as defined under the CFR. And as you're going to see on the left-hand side, and then once you've identified those excluded costs, it's going to give you the total excluded costs, which will then give you your indirect cost rate, right? Your modified total direct costs against which your de minimis rate will be applied. And then your final number will be your indirect cost rate. And then you will then add that to your indirect cost line in your budget allocation. Another frequently asked question we've had is, as we move to Salesforce, you basically have one line because you're not doing your budget allocations on a per fund source basis. However, you still are provided with your total fund award amount for each fund source that KCRHA is awarding to you. So basically what you're going to do is your de minimis, not your de minimis, but your indirect cost calculation on a fund source basis, right? And once you get that total percentage for each fund source, you add those all together, and that total amount is what you're going to put in your Salesforce budget allocation on that indirect cost line. Okay. Are there any questions related to that or anything I've discussed? Okay. Now, we recognize you may noodle over this, and once you receive a copy and review it, questions may come to mind. Please don't hesitate to email compliance@kcrha.org with any questions that you have about the presentation, or if you need some support or technical assistance related to your indirect cost calculations. And then also noting your primary resource is always going to be available to you, your contract manager, which is your program specialist, the program specialist assigned to your program. They are always available to you as your first go-to as well. Okay. And so now we're moving to The final QA, and I'm noting we're a little over time, and so I'm just going to say if you have any additional and I do see one hand raised, so please go ahead and come off mic, Alma, and we'll answer one question. And before you ask, though, I do want to say for anyone who has additional questions, please feel free to drop them in the chat so that we can circle back with you with an answer. And please make sure that you put your entity, your agency, the name of the agency that you're with, along with your question in the chat. Okay, Alma?
Should I ask the question in the chat or?
You go ahead and ask. We can, I think we have a
I
moment
don't
for
know if
one
it's gonna
question.
be quick, but I'm asking question regarding the funding source and the dates requirements that we have. I'm a little bit confused about that because I think we start the year when you guys choosing which funding source we're gonna be spending each month. Because we did the budget in beginning under the total contract amount without choosing the funding source. Now, when I open the invoice on Salesforce just now in the meeting, looks like the things change in the invoice. It looks like now we have option to put the expenses under each funding source. Can
That
you
is true.
confirm that?
Absolutely. So that is what Myra was alluding to. Myra, if you could go back to that slide while I'm answering really quickly. So we highly recommend that you do your invoice allocation when you're invoicing, that you allocate to your fund sources. This will help expedite your invoice review, and it will prevent the need for you to have to go back and update your general ledgers to reflect any allocations we may do. Now, that being said, you're not required to do your own allocations. That is true. But we strongly recommend that you do because it makes your administrative burden lighter, right? One of the things that we've noted through this process is when we're doing allocations, if it's not aligned with what you originally included in your GL, because at the end of the performance period, it must be aligned and it must be audit ready, right? And that means you would then have to go back and make an adjustment. And so in order to avoid your having to do those back end adjustments, we're encouraging you to, right? And that being said, to the extent that if you choose to do those allocations with your disbursements, if we know that it is not aligned with spending priorities or we are in a situation where we're working to maximize spending so that we're not losing funds, we still have the ability and would make those adjustments after reaching out to you to consult with you on those adjustments and to receive approval from your agency to do that on your behalf. Does that answer your question, Alma?
Yes, and that's very helpful actually to know. I wish that we knew that from beginning. Is that going to be affecting the budget that we submitted? Because we did submit the budget based on the contract funding amount. We never choose the
It
budget
doesn't.
for each category or
So
for
it
each
doesn't.
funding source. Okay.
It doesn't.
Okay.
It doesn't impact it because it doesn't impact your total budget amount, right?
Yeah, I understand
Because you
that.
can only allocate in accordance to your total budget amount based on your fund award by fund source, right? So even though you're not doing your initial budget allocation by fund source when you submit your budget under your contract renewal, you still receive an award letter, and we still do let you know upfront how much you're receiving in funds for each fund type.
Yeah. Okay. Thank you. Thank you.
You're welcome. Absolutely. Okay. And I am turning it back to Myra now.
Before we end our meeting, I wanted to share a few updates with all of you. The compliance and contract teams are going to begin hosting biannual training sessions to support partners during the contract performance period. So please be on the lookout for an email with the schedule from us. These trainings will be mandatory and will provide enough notice to ensure that you are able to register and plan for those meetings. We've also recently updated the Invoice Frequently Asked Questions document. It was updated to reflect a new question that we received in April. All of you should have received an email with the updated document, and in addition, the FAQ document was uploaded in Salesforce so that you can access it at any time. And we also have an upcoming training. The contracts team will be hosting the COC contract renewals training on April 30th, 2026. More information and the registration link is coming soon. And that concludes our training. Thank you again for joining us, and please feel free to send us any questions that you have after this training, and I hope you all have a great rest of the day.